The big train that couldn't. Dow 20,000. Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the stock market update for the week coming up of January 2nd, 2017, the very first week of the brand new year. And we're looking at the absolute last trading day from 2016. You know, everyone's heard the story about the little train that could. Well, the Dow Industrials are definitely the big train, right? The 30 big benchmark companies in the U.S. and they came very close to this milestone of 20,000. You know, Dow 20,000 would have been historic, and just could not get there. So I call this the big train that couldn't, at least not yet. Now we don't know whether it will go on to cross 20,000 to make new highs in the upcoming year, but it's pulled back from it just a little bit. Let's take a look at that on a lower time frame for a moment. So here's the Dow Industrials on a 60-minute chart, and you can see we've had this really strong run up from November 9th after the presidential election. This whole thing that we've been calling the Trump bump, pretty much a uninterrupted move up. And you can see now here, if you look at the oscillator, some initial momentum still going, but losing momentum, and now the negative momentum is growing. That's called bearish divergence. And so it would be natural and normal for this to retrace a bit. You know, markets and indexes don't move in straight lines. They move in a series of higher highs, higher lows. And so we've definitely got higher highs. You know, what would the lows look like here? Just in terms of, you know, kind of a normal, natural pullback. Well, we can use Fibonacci retracement measurements and say an expected typical pullback from the current level, it looks like it's starting, would be down to about Dow 19,200 to 18,733, in between these two blue lines here. That would be a normal, natural way the market behaves. Of course, it doesn't always follow the rules, but this is the high probability, what's expected to at least pull down to here. And is that signaling, you know, a bigger downtrend and a bigger retracement in the market? Don't know that for sure yet, but we do expect this kind of a pullback, even if it were to go on eventually to head on to make new highs early in the year. So that's what we're looking for, and that'll be very tradable. We've got several trades that we're looking for to participate in at least a short-term pullback of, you know, a week to a couple weeks to a month or something like that. So that's what's going on. That's what we're expecting going into the new year. That's the high probability. Of course, we will wait and see what actually happens, what the reality is, and we'll place our trades and manage them according to that actual reality. Let's go ahead and take a look at the gold and oil markets now, as we do each week. So here's the gold futures contract on a daily chart. And, you know, we enjoyed this nice run up early in the year. We were trading that, made some good profit on it. And it's had a pretty significant pullback later in the year. Now it's starting to show some early signs that it may have found a bottom down here. You can see it consolidated, and now it's starting to head back up. So this could be early signs of the next leg up in gold beginning, but it's not proven yet. We've got a little move up. We want to see it, you know, higher high, higher low, new high. Really tells us that the trend has changed and it's heading up. So we're watching this closely, but there's no evidence yet that gold is turning up for sure. But when it does, there probably will be some really good trades. So we'll watch that and provide updates week by week as we move into the new year. Here's crude oil futures on a daily chart, and it's really trying. Oil's always volatile, that's for sure. We're really watching this key level up here at what is it? 56.21. I've got a line drawn there. If we can go above that, then we're probably heading up into the mid 60s to low 80s, and that would just be a retracement from the big move down we saw last year. So that would be a continuation of this oil recovery. You know, a lot of that depends on inventory levels and whether OPEC and non-OPEC players who have made some agreements about production cuts, whether they actually do them, and, you know, the massive oil reserves that have been built up get drawn down, and, you know, tighten up supply a little bit and drive up price. We have to wait and see how that plays out, but the technical signs are here that it's trying to work its way back up. And again, key resistance level up here just above $56 a barrel, And if it does breach that, then we expect this recovery to really kind of take off. Again, we'll provide updates. Sometimes these things take a little bit of time to play out. So we're not trading directly on this yet. We're waiting for some more proof. We are doing really, really well on some energy-related companies that aren't moving with oil. You know, they have other things that drive their price. Well, that's it. Last update for this year. I'm recording this on Saturday, December 31st, and I wish everyone listening, you and your family, a very happy new year. Hope you have a very safe and fun celebration, and I'm really looking forward to 2017. I think it's going to be a great year, and we're looking for a very profitable 2017. And speaking of a profitable 2017, we just closed out our final trades for 2016, and you can see then the results. 2016 year end, we closed up the year 24.14% total return for our picks from our service. You know, and that's more than double the major indexes. So pretty pleased with those results, given it was a tough year to trade. A lot of volatility. You know, we had the worst start to the year in terms of market. The market drop in recent history. We had Brexit mid-year disrupt the markets a little bit. We had some terror attacks during the year. We had intrigue by the Fed, and you know, what are they going to do with interest rates? And then, of course, at the end of the year, very interesting presidential election and outcome. So a lot of things made the market really tough to trade, and so we were really pleased that we were able to knock out some really consistent and good gains at 24.14%. If you're interested in signing up for the stock picks for the new year, there's a link down in the comments section, and we've got some specials running, so you may want to check that out. Again, have a very happy new year. Thanks for following along with my newsletter. I enjoy publishing this, and again, looking forward to a great 2017. Thanks, and we'll catch you on the next one. Bye.